Hello, everybody. Good morning, good afternoon, and good evening, depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. Today I wanted to go through and give you guys some analysis inside of Bitcoin. I found some really interesting patterns comparing the last cycle to this cycle, and I wanted to share with you guys just how similar these two are. I'm going to explain to you guys why I think that the end of this year is going to be the time where Bitcoin starts to break out of its all-time high, and why next year is about to be one of the biggest expansions of growth inside of the crypto markets in all of history. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Make sure that you guys click that notification bell so you don't miss out on any new videos like the one provided for you here. And always remember, guys, I have the fastest growing and the very best Discord community out there for cryptocurrency. Currently, we have over 17,000 members, and it's growing super fast, so make sure you guys join. It's free for anybody that wants to. All you guys got to do to join is to click inside of the description of this video, and there you're going to find the invitation link. Now, on the Discord server, I also offer my more exclusive content like the video course and signal. So if you guys would like more information on how to sign up for that and copy all the trades that I take, make sure you stay all the way to the end of this video, because I'm going to be taking a couple minutes to explain how you guys can get signed up, the pros of doing so, and what it's going to take to get you guys going today. I also wanted to mention that if you guys would also like to download my free ebook, I have that linked in the description of this video as well. It's over 38 pages full of exciting information that's going to teach you guys some of the beginner, intermediate, and advanced stuff when it comes to trading and investing in the markets. There's also a little quiz packed full of terminology that you guys will be able to test yourself on to make sure that you guys get the overall information. So make sure you guys download that today, get your free copy, and with all that being said, let's jump right into this video today. Alrighty guys, so here we are taking a look at the Bitcoin chart today. I wanted to go over the entire graph of it because I wanted to explain to you guys just how similar these two charts actually are. You know, it's really amazing to me that we see so many people back and forth about the overall direction of Bitcoin. And I just think because of the consolidation that we've had since the all-time high, it's been so vastly different than a lot of the other cycles. But really the case is it's not so much different that I would make such a big assumption saying that we're going to be going into new lows or that we're not going to be following the same path, because really when you break it down, we're following almost the exact same trajectory as the last cycle, and that's the thing that I don't understand. Obviously there's the people that are all for lengthening cycles, and then they're kind of on that belief system, but for me personally, I just don't see it. I think that we're much more correlated with what the last cycle did, and so that's why for me personally, I believe that we're on this 4-year path, or the 4-year cycle theory, and that's kind of the way that I've stuck to this. That's how I've built my entire plan for structuring and selling out of these markets. And I'm going to share with you guys a little bit as to why I think that these two are similar, kind of where I think we're headed still for this market structure, and where I believe that we're going to be going, along with exact time frames, so you guys can start to understand and build your own analysis with the market. So first things first, I wanted to go through the last cycle. Now, really the last cycle, the way I like to call this thing is like the 4-year bull. Now, not a bull market, but just a bull shape. It's a big rounded structure before finally we break the all-time highs, and that's when we go into the supermoon price discovery, right? Now, this is kind of the way that a market cycle will look more often than not. It makes this big pump, big crash, and then it rounds out, and then it does it again, and it makes these little waves the whole way up, and that's just the kind of way market cycles work, and we can see that this has been the case every single point up to here. Now, the reason why I don't actually include this is just because I don't believe that there was enough liquidity for it to really build the same type of structure here. This was the first time where we had billions of dollars in Bitcoin, and so for that, it had a lot more symmetrical market structure based off of a market cycle should be, whereas back here, it looked like a market cycle, but there was only a little bit of money that needed to even be coming in here before it would pump so high. And so I just don't think that it lines up quite to the same correlation of what I'm explaining here. So when we go through here, we can see that Bitcoin topped at around December of 2013, right before the new year into 2014. And if we look all the way over, it took exactly 1,216 days, or roughly 40 bars, before we managed to break out of that all-time high mark and before we started impulsing into price discovery. And so it was about 1,200 days worth of consolidation from high back to the breakout point of that previous all-time high. And then that's where we had the year-long bull run that was just really crazy. That's where altcoins went crazy. And that's really where everybody made all their money, right? Now, when we look at this cycle today, we can see the Bitcoin and the last cycle are actually very similar. You know, maybe the bowl shaped isn't quite as symmetrical as the last cycle, but nonetheless, we still are getting that nice rounded formation here. And we can see that by COVID, we can see that this is, in my opinion, a pretty dead giveaway that the bottom was in. I mean, we had this nasty wick that dropped, and then we closed green and got the bullish engulfing candle right after. That, to me, was a dead giveaway that the bottom was in, and this is where we're starting to build that basing structure. Now, where we're currently sitting at right now is just the retest of some of the previous resistance levels that we had broken from. And so I don't look at that as any bearish by any means, even though I think that we could go more towards like 9K on the short term. It still is going to point to the same direction. And that, in my opinion, is going to point towards us breaking this all-time high mark. And so what I've gone through is I've actually taken 1,216 days worth of consolidation, or roughly the same amount of time it took for Bitcoin to break the all-time high. And I've labeled it all the way over to here. And we can see that that's going to take us to about April 1st of 2021 if we continue to follow that same basing structure. Now, in my opinion, that's going to be pretty much the same because this was about March of 2017. That was really the year where everything went crazy. And so if this takes us to about March or April, you know, it's going to be about the same type of correlation here. And we should really look forward towards the same type of move. And that's really what I'm going to be looking out for more or less. And when I look at this Bitcoin chart, I see the same type of correlations. You know, it looks very much the same as far as the market structure goes. Obviously, there can be some difference here. But overall, it's just more... This more just looks correlated. It looks just like the last cycle. Now, the thing that's a little bit different here, we had this collapse, right? We had the yearly crash. So after we had the blow off top, we had this crash, right? This was about an 83, 84% correction. And then from here, we stayed inside of this accumulation range at this double bottom formation, low here and low here, for about 280 days. Now, the only big difference here was the fact that, you know, this is also about the same amount of time. This was about a year-long decline. From top to bottom was almost exactly a year, top to bottom. And instead of consolidating for 280 days here, Bitcoin consolidated for about 3 months here. And then we had the next big attempt at breaking some of that resistance, the second dead cat bounce, right? We had this big dead cat bounce, and, you know, this was really the first higher high. And so for that has been different than any of the other cycles. Really, in the previous cycles, we'd make the low, we'd make our first leg up, and then we'd make our second leg up, and then we'd go parabolic. And this has really been the case up to this point. Low here, higher high, and then we go parabolic. And so up to this point, that was kind of the way that we'd been expecting to see, whereas this cycle was completely different. After that yearly decline, we just got a quick impulse all the way back up. And so for that, I think that the reason why we actually had such a big drop after that initial impulse, instead of just going straight into price discovery, which was about 72% of a decline, you know, all these other ones were short little declines. This one was maybe a 40% decline, 30 to 40%, so about 30%. This one over here was about the same, 30 to 40%, about 40%. And so we could see that we got two 40% corrections here. Now, in the meantime, I also wanted to mention that if we pull up Fibonacci, we can see that if we take a look over here at the second lower high, this takes us perfectly in place with that .618 Fibonacci. Our second higher high, one higher high, two higher high. That takes us to that first Fibonacci level at the 618. Now, if we come over here and take a look at the same thing here, from low to high, we can see that this dead cat bounce brought us perfectly back up to that 618. And so in the last cycles where we would get that 618 bounce after about two higher highs, you can see the same thing happen about here. After about two higher highs, we'd get to about that 618 level. This is what happened here, higher high one, higher high two. And in this one, we didn't really get the two higher highs. Instead, we just got the quick impulse straight to that level. And so the reason why I believe that we saw such a sharp decline on the way down was because we never really got that up on this one. This was just higher highs and higher lows. This one was about a higher high, 40% drop, higher high, 40% drop. Whereas this one was just a quick impulse straight to that 618. And then we needed to have a corrective move back down to shake out all of the weak hands, right? And so that's why I believe that, you know, instead of getting two higher highs, we pretty much just finished both of these in one swift move, which was right here. We got both of those impulses just in one leg up. And so for that, we had to have a sharper decline back down before we could shake everybody out. Because this one got two shakeouts, 40% shakeout here, 40% shakeout there. This one didn't get that. In fact, we had to get both of those kind of in one. And so we got the 2 pumps in one to the 618 right here. We needed to get the 2 shakeouts in one as well, which eventually equated to a 72% decline, right? So that's why I believe that this cycle has been a little bit different. But more or less, it still follows the same trajectory. Now, next, I'm actually going to dive in to some time frames to share with you guys just how correlated these are, not only based off of the market structure, not only based off of the time frames in which we've accumulated, but we're also going to be able to break this down to exact reversal points of the new year. So here we have it, guys. I've gone through and already labeled this to you. Now, from where we're currently sitting at from the all-time high, we're at about 1,014 days inside of this accumulation. And in the last cycle, I've just gone through and labeled the same thing, 1,014 days. And so we're actually going to go back, compare the last cycle to explain to you guys kind of my thoughts and perspectives with this. Now, this is a log scale chart, so it might look a little bit different here. Now, what I wanted to talk to you guys about was just how correlated these are from just time frames, because really this chart and this analysis is going to help us to understand and conceptualize the big picture trend so that we're not so, on the fence about things, that we're not so shaken out by this retrace, because this is just a big buying opportunity, guys, and there's no reason to be shaken out. I personally am in accumulation mode until 2021, because 2021, I don't want to sell anything until we get the blow off top, because that's where I'm going to make the majority of my profit. It doesn't make sense for me to start selling below the all-time high. And that's what I see a lot of people doing. They're trying to take too much short-term profits before Bitcoin's even hit $20,000 yet. And I just think that that's going to be a big mistake. And they're going to shortly understand that when we get to the next year. Around spring of next year is when we're going to start to see a big expansion in the next cycle. And the people that were selling before that expansion are really going to start scratching their heads and wondering, man, I shouldn't have done that. They start counting their profits. They start thinking about how much, Ethereum they were holding back around this time last year, a year in advance, obviously, but they're going to start scratching their heads and be like, oh my gosh, if I would have just held that instead of sell, yeah, I made my 10x return, but if I would have just held, I would have had 100x. And so this is the way it works, guys. People are going to be pissed off at themselves because they sold too early, and you could never hold long enough. Well, you can hold too long, in my opinion, but with the way these crypto markets go, you can just hold and hold and hold. And if you have good investments with sound companies, cryptos that are really solving a significant use case in society, then obviously you can make a lot of money. But a lot of people don't understand that. They also don't know how to hold the length of the trend. And for that, they're not going to be able to capitalize. And so if we come over here, guys, I've gone through and labeled 4 years. And I wanted to go through these 4 years to share with you guys how, we're currently stacking up with the last cycle and how they line up today. And so this is the last cycle. Basically what I've gone through is labeled the peak high. I've gone and labeled the peak low. I've gone after the peak low. I've just labeled the January 1st reversal points. And so we've gone the 1st of January 2017 or 2016 and then the 1st of January 2017. And we're going to go through and compare these 2 cycles because really I've done the exact same thing between both of these. And I just think that these are really, really correlated charts here. And it's important to pay attention for them. So in the last cycle, we topped out around the 1st of December, right? This is where we started to collapse. And then we had that bear market. So this comes around the 1st of December. And we get the significant low, about the lowest point of that cycle, around the 13th of January of 2015. So about 13 months worth of a decline from the all-time high to where we get to the all-time low was about a 13-month decline. Now, if we come over here and take a look at this cycle, we can see that Bitcoin topped pretty much around the same point. This was about the 15th of December, right around that 1st of December timeframe. This happened in about 2017, technically the start of 2018. Now, after here, just like the last cycle, Bitcoin went for about 13 months of a downturn, whereas this one went to about, it's about the same time, about exactly a year from peak high to peak low. So this one is a little bit even more correlated with that yearly increment, whereas this one lasted about an extra month. So we can see that we got pretty much the same type of market structure. Now, this takes us to year 2 into year 3, whereas Bitcoin during this time, this is where we had the 280 days worth of consolidation, almost a full year in which we just went sideways and chopped back and forth before making that first higher high, right? Now, after this, we get year 3. Year 3 comes about January 1st, 2016, and this is really our first higher high on that new macro bull trend because we can see that the bull trend starts about right here, depending on where you want to label it. This is really where we start uptrending on that new parabolic trend. And this happens in year 3. Year 3 is the first attempt at making that higher high. And so this is pretty similar to what we're seeing today. Instead of getting, 2 years, or instead of getting a year worth of consolidation here, we got 3 months. We got a quick impulse, and then from that we got a sharp decline back down. And so this doesn't really change anything. Overall, the market structure does look different. I mean, we didn't have the same type of choppy sideways action, and then when we started the parabolic trend, it wasn't just this slow higher high, higher low. This was just a quick bounce, a quick sell-off, and then this is just our higher high. So we can see that this is our high, this is our low, this is a higher low, and this is a higher high. And so technically we've just finished our first higher high. And with this V bottom forming right after COVID, this is confirmation enough for me to show that this is a bullish market structure, and we're going to go much higher from here. And we can see that this is pretty much the same type of market structure. It just happens a little bit different. This is our high, this is our low, this is our higher low, this is our higher high, higher high, and technically this is our higher high to confirm the break above this. And so we can see that we got pretty much the same market structure. This is just happening on a much bigger scale. It's a much more choppy, much more volatile price action, whereas this one kind of built that support floor, and then we started grinding up for about a year before we went into price discovery. This one's not doing the same type of structure. It's following along with the same higher highs and higher lows, but overall, this is a lot more volatile. And so what we're currently seeing today, is about 1,014 days worth of consolidation. If we look at 1,014 over here, we can see that that takes us to about right here at this point. I'm going to label this one green. Kind of just in this in-between stage before we get the next big impulse that's going to take us back to that all-time high mark. And that's really what I'm watching out for with Bitcoin today. Overall, I think that we're pretty much following the same trajectory. I think that it's much more likely that we're actually going to be venturing closer to that all-time high mark before we close out the year. I think that we're going to end up anywhere from about 17K to about 20,000 per Bitcoin as we close out this new year. And that's really what I'm going to be watching out for. I think that the end of this year, around 2021, the start of that new year, we're going to be close to that all-time high mark, and we're going to start to see whether we go down for one more low. I think that we're going to get a quick impulse after this, and it's going to take us to that all-time high mark pretty quickly. And that's actually what I think a lot of people are going to be skeptical about. A lot of people already are skeptical about that. We've just seen so much choppy action. Everybody's expecting another big coronavirus sell-off, and I just don't see it. Personally, if we get a sell-off, we're going to end at about 9K, and that's going to be our support floor before we start venturing back to that all-time high mark. There's a lot of people with PTSD from this crash. There's a lot of people that are just shaken up in general, and for that, they're going to miss out on the opportunity because you got to have a clear head when you're looking at this. And if we look at this, guys, year 4 is really the last point of this 4-year bull, like I like to call it. This big 4-year rounded formation. Year 4 takes us to right when we're breaking out of that all-time high mark. Year 4 was the point where we first broke and hit that all-time high, which year 4 in this cycle is going to be at the beginning of 2021. And so, guys, when I look at this chart, I see the same correlations. We get the high. 1 year from that point takes us to the low. Same thing happened here. We get the high. 1 year from that point takes us to the low. A year from that point takes us to our first higher high on that trend. Same thing happens here. Year 3, this is a higher high. Low, high. Even though we sold off, this is still a higher high. Nonetheless, this is still holding support above the previous high. And so this is a higher high once again. And so year 4, I'm expecting year 4 to take us back closer towards that all-time high mark right over this way. And that's what I'm going to be watching out for, guys. That's the way my plan is. In my opinion, there's no reason to be selling any crypto below Bitcoin's all-time high. Wait until Bitcoin goes into price discovery because that's where we get this real parabolic movement that we've been expecting to see. And so that's the way I'm going to be trading this market, guys. I have no intention of selling. I don't have any big reason to be taking any profits. I mean, I don't have to pay my bills with, my trading profits. In fact, I keep my trading and investing profits secular to their own thing. You guys don't really want to become full-time traders to where you have to cash out and take profit to go and pay for your lifestyle. Obviously, you can. I mean, if you're good at it and it works for you, go for it. But for me personally, I like to have separate sources of income so that I can keep my investments their own thing because you want to maximize the fullest potential of that bull run. And the best way for me to do that is just to not touch my investments. Yeah, sometimes I'll buy at high points before a crash. I bought a lot of crypto back down in here at around the January 1st. Got some profit here. During the initial sell-off, I started accumulating more, and then COVID crashed, and I didn't really have a ton of cash left to buy, and I had to sit that out. I did have a little bit of cash. I managed to pull some more Bitcoin, bought some more XRP, bought some more Ethereum. But aside from that, I was kind of tapped out. And so sometimes you're going to hold on to losses. Sometimes you buy before a drop. That's just the way it goes, guys. I don't ever claim to be some maximum. I don't ever claim to be some super crazy analyst that just nails every trade. All I do know is that I can trade. I can make a macro trend. You know, I can look at a trading plan and I can dollar cost average into those dips, and I can make a lot of profit doing so. And so that's the way that I've basically traded this whole way. I know technical analysis. I can get really good entries for that. But, you know, there's going to be points where you buy, and then you have to stomach a loss. And for me, because I'm always focused on the long term, I'm always looking to hold a year and a day for my tax reasons. It's always the tax break that you're looking for. And so for me, I'm just going to continue to dollar cost average. I'm going to continue to average into those dips. If I still have to stomach a short-term loss for a little while, it's just part of the game, guys. I've been here for so long that I've dealt with this so many times. I have zero attachment to my money, especially after COVID. COVID was the one defining moment where it was like, all right, you know, how strong are you right now? How well are you going to be able to hold, stick to your guns, stick to your trading plan, and go through this trend? Because that was the most trying time. I mean, this was the capitulation, right? I held all the way through this crash after 2018. We got the dead cat bounce, and then I held all the way through the COVID crash, and COVID was way scarier. COVID was way more terrifying, way more intimidating, but at the end of the day, I did my part by buying more. And that's the thing, guys. If you're not willing to hold through the dips, you're not going to be willing to make all the profit on the way up because you're going to sell in the dip instead. And that's just the funny part, funny truth of the matter. You got to be willing to hold. And so, anyways, guys, this is the analysis I had for you. Overall, I think that we've just got a couple more months left of consolidation before we get and start venturing closer back to that all-time high mark around $17,000 to $20,000. When we break down the time frames, it's almost exactly the same as the last cycle. Obviously, the market structure can look a little bit different, but overall, this is pretty much just the same exact story being rewritten and fed to us today in the now history of Bitcoin. And so I just think that we should continue to focus on that 2021 year. 2021 is going to be the year where all of the markets go crazy. This is where we can make all of this big financial gain. But the only way to make the big financial gain is to dollar cost average when nobody else is doing so. There's still a number of altcoins that are severely undervalued. I like XRP. I like Ethereum. You know, I like Chainlink now. Chainlink's even more undervalued. I didn't think we'd get back to these levels. And so I've done my part to continue to accumulate. Do what you guys can. You know, whether this is the bottom or whether we get one more dip to 9K, it doesn't matter. I'm just going to be buying that dip. I pray we get one more low because, like I stated, guys, what's going to come in the year 2021 is the big price action, the big expansion in value. And so we want to do our part by accumulating beforehand because, you know, you don't want to be the guy that's buying all of our bags as we're selling because that's what the profitable traders are going to be doing. They're going to be scaling out the entire next cycle in 2021, and all of the retail money is going to be buying all of those bags. They're just going to be buying, right, waiting for the big rug pull, because when the rug pull happens, you do not want to be a part of that. Anyways, guys, thank you so much for tuning in. Quickly, before we wrap things up, I wanted to take a couple minutes to explain how you guys can sign up for the video course and signals for the people that want to. The video course is going to be the thing for you if you guys want to learn how to do technical analysis inside of the market, if you want to learn how to trade, invest, learn all the terminology, learn all of the technical skills required. I have a video course that's actually going to be teaching all of my strategies, all of the ways I profit, beginner, intermediate, and advanced stuff. And so you guys can actually learn all of that stuff in a 20 educational series that I provide inside of my Discord. Now, for the people that would rather just copy all the trades that I take, you want to follow my trading plan, you want to know exactly what I'm doing with my money, when I'm doing it, so that you guys can stay informed with everything that's going on, make sure you guys join my signals. If you guys can only pick one, I always recommend go with the signals first because you guys can make some money off of that. You can take your profits and then you can buy the course if this is something you want to pursue full time. And so this is just the way that I do it, guys. I've got chopped up in this market so many different times and it's taken me a lot of years before I figured out a sound strategy. So I know a lot of you new guys that are getting into this market, you're going to feel the same thing. A lot of you guys will probably get rewarded for bad habits because the market's just going to consistently go up. And, you know, you can make some money at the end of the day, but if you don't really know what you're doing, you're going to lose it all back to the market. And so this is what I do inside of my group. I help you guys stay consistent, stay profitable, and make all of this financial fortune that I've been able to amass since 2016. So if this is interesting to you guys, I have links in the description of this video to buy both the course and the signals. You guys can purchase them together or you can purchase them separate. I also wanted to mention that if you guys would like to download my free ebook, that is also linked in the description as well. Go through there, learn some of the information, get a little bit of a refreshment as to what my course is going to come with, get a little bit of an idea of what my signals are going to look like, and so that way you guys don't have to give me any money. You guys can merely just learn from some of my educational content that I provide for free, because it's about 38 pages long, tons of exciting information. Going to teach you guys a lot. There's also a quiz in there to quiz yourself on the information learned. So yeah, guys, check that stuff out. Get a hold of me. Join the Discord, and with all that being said, I will catch you in the next video. As always, peace out.